All right, it's a big week on the financial markets, headlined by Wednesday's meeting of the United States Federal Reserve. Now, the theme is going to be potentially higher for longer. We're going to be talking about Trump tariffs. We're going to be talking about persistent inflation and also the relative strength of the U.S. jobs market. That is the number one event. So we better figure out a way to trade the U.S. dollar if we're going to make any money at all this week. All right, let's get on to our key market and our trade idea of the week. This is the CME Fed Watch Index, and it tells us what the markets believe is going to happen to interest rates at any given point in time in the future. For 29th of January, that would be Wednesday, we are expecting 99.5% chance that interest rates are going to be held firm. We actually don't price in a Fed rate cut until about June. So forward guidance is going to be everything. We're going to have this press conference for you live at 2:30 p.m. Eastern time over at howtotrade.com. Be sure to come check us out. We're going to have live trading and also analysis. But right now, higher for longer seems to be the theme. Let's take a look at how these expectations are impacting the EURUSD. Okay, this is our trade of the week. It's the Euro US dollar, and we've got a nice big macro range to work with on the monthly chart. So let's go ahead and take a look at these technicals. You can see right there, double top back in, let's see, August and September, right up there about 112.14. And then we saw the big crash all the way down in January to 101.77. This move, believe it or not, came on the back of the Fed actually cutting interest rates. That's supposed to weaken the dollar, and it did the opposite. It actually strengthened it, at least against the euro. So this nice big range, that is a monster range. We're looking to join this trend, the significant 90-day trend. I want my target my resistance zone with a sell, and that's right up there, right around 105.73, that Fibonacci retracement zone. You can see right over here. Here's our trade with our coordinates. Stop loss, you can play it fairly tight. That's what I'm going to do. 106.29, that's going to be my initial stop. Entry point's going to be 105.63-ish for the sell, and then we're going to be looking for at least a one-to-one pullback. Now remember, you don't have to stick to a one-to-one pullback. If in fact you wanted to adjust your risk versus reward, you could be shooting for something down in here, maybe a 103.80, maybe going with maybe a 2.5 to 1 reward to risk ratio. If you wanted to do something like that, just remember that's going to be more of a position trade, not necessarily a scalp. But that's our trade of the week. There's our resistance zone. We'll see how it holds up. Be sure to join us on live streams. We'll recap this trade and the rest of our trade ideas over at howtotrade.com. All right, that's the trade of the week. Here we go. It's Fed time. Jerome Powell's tone will be everything. That will be the number one market driver this week. So take a look at our trade of the week. Be sure to join us over at howtotrade.com for FOMC Live. I'll have all the live coverage for you. We'll watch the press conference and break down the markets in real time. We'll do some scalping, probably look at gold, the US 30, and probably the Euro USD. So we'll see you there. Like, subscribe. See you at FOMC Live.